Hello and welcome back to our channel. Today we are going to talk about the fundamental analysis for stocks, what it is, what it consists of, what are the indicators, and how it can be helpful. How we are defining that company fundamental data is healthy and investment on it makes sense from financial standpoint. First of all, let's check what is the fundamental analysis. Fundamental analysis. It is a method of determining a stock's intrinsic value. Fundamental analysis search for stock trading as price higher or lower than the real value. Excuse me. Let's check metrics. What it consists of. So return of equity, cash flow, earning per share, dividend yield, efficiency ratios, price to book, liquidity ratios. Different set of parameters is included on it. Let's check in Investopedia. Key ratios are price to earning, earning per share, return of equity, and debt to equity. Let's open all of those and simultaneously let's check on Robinhood for you can see here the Robinhood interface. Check on Robinhood the stock named Apple, company which is producing iPhones, iPads, and basically everything which starts with I, and also MacBooks, which are not counted. So we can see here statistics price to earning ratio 37:31, dividend yield. Also here we can see earnings. Here it is. Earning per share, estimated versus actual. Of course, as the here now is showing the darker background, so estimations are not visible maybe, but still they are in the graph. We can see that projected earnings and later actual earnings are the ones that drive the stock price or are in the list of what drives for a stock price. Okay, now the other price to earnings we checked, earning per share, return of the equity, which is dividing the net income by shareholders' equity, or return of assets, net assets. Debt to equity is calculated by dividing company total liabilities by its shareholders' equity. And now we're going to write a code that will get us all of those data. So let's move forward. Last task was task 18 and this one will be task 19. Task 19, fundamental data. Yes, we want to add. What our code will consist of. It will have, of course, imports. It will get the stock list from the stock file. Then it will fetch the fundamental data, and with Streamlit we are going to display those. So basically it's not too much complicated task, and at the end of our exercise today we will run it and we will check what it displays, and also I'll make an important announcement at the end of this session. Let's start imports. Import Streamlit as st, import Yahoo Finance as YF, import OS, because we are going to use the system. Okay. Now let's create our header for the page. Streamlit, right. Or even better, let's start with getting the methods and then get back to Streamlit all in one place. Define load stock symbol. Try file path. We done this exercise many times, so let's just move forward and then I will explain this in a brief. Join OS path your name, file name txt. Open file path, and we are going to need it to be in read mode as file symbols or line strip or line in file if line strip, and at the end return symbols. And if our try won't work, except file not found error, Streamlit error message, stock name txt file cannot be found. And in this case, just return empty list. Okay, our method for accessing the file is ready. What does it include? It construct the path relative to the script location, open file in a read mode, line by line. Next, creates a list of symbols by stripping each line from the file and return symbols. And if this doesn't work, file not found, it displays an error. The file cannot be found and returns an empty list. Our next function will be fundamental data function, which will connect to Yahoo Finance and get the information regarding each stock in our stocks list. And it will include typically few fields to acquire the data from. So def fetch fundamental data stock symbol will be the attribute parameter of the function. Stock equals to finance ticker stock symbol info is stock, our data object, and subsection of data named info. And from here we are going to return a dictionary. Market capitalization. It will be info get market cap. Next will be PE ratio, info get trailing PE. Next will be earning per share, info get trailing EPS. Next will be EBITDA, equity before interest, earnings before interest, tax, depreciation and amortization. This complicated term, but usually very helpful. EBITDA info get EBITDA. Revenue will be info get revenue. No, not revenue. Total revenue. That was the field name. Gross. We don't need gross profit here. Debt to equity. Info get debt to equity. Current ratio, info get current ratio, and last but not least the quick ratio, info get quick ratio. Now let's talk a little about each of these metrics, what they mean and why they are important. Market capitalization. This is how much company costs, like total market value of outstanding shares. Basically, it's the calculation of the stock price, which in this case will be this, 226, by number of stocks. I believe we can't find it here, but we can see market capitalization in here. Okay, next one is price to earning ratio. It's the ratio of company's current share price to its earning per share. Basically, why it is used, it helps to understand whether stock is overvalued or undervalued. So different analytical agencies suggest different metrics for this, like what will be the healthy portion, but I won't going to implement any threshold myself. I will let it for you to decide. And what can be the good next step in this exercise is to provide points for each of these metrics, like get the thresholds for market capitalization. If it's above $100 billion, the stock can get the score 1. If it's not, then 0. PE ratio. For example, you decided the PE ratio between 0 to 30. It can be considered as the undervalued stock, like stock's real price is more than mentioned there, and in that case stock can get 1 more point. And in total you can calculate, summarize all the points if stock gets for any of this, and then do some of your own rating system for the stocks. But again, this is just my suggestion. You are free to surf the web and get information from many different sources in order to define for yourself what are the acceptable threshold values for each of these metrics. I'm sure each and every one of you will have their own set of rules when and which stock consider healthy. Okay, we covered PE ratio. Let's go over to others. EPS, earning per share. We went through it for the Apple example. Earning per share here is 2.16. It measures the profitability of the company. Next is EBITDA, earning before interest, tax, depreciation, amortization. It's indicating company's overall financial performance and profitability. What we can estimate of this, higher EBITDA is better as it indicates strong earnings. Next is the revenue, the total amount of money generated by the company from its business activities. For Apple, for example, it will be the total amount of all services and sales that company does, like iCloud subscription, Apple Music, Apple TV, whatever it's considered that it's operational field for the company. Let's go next to debt to equity, a measure of company's financial leverage, dividing total liabilities by the shareholder equity. For here, a lot of analysts consider ratio less than 1 is generally good, and higher ratio considered a risk. But again, that's a bit of a question of personal anticipation. I don't say that any value is good, but in a reasonable thresholds, like it can be even more than 1 for some reasons, debt to equity, but other parameters can provide some sort of financial stability, and for some moment in the history, DTE, debt to equity, can be rather over 1. Of course, we are not considering 100 to be a very good value for debt to equity parameters. Next is current ratio, which measures liquidity ratio, company's ability to pay short-term obligations. This is considered basically within the range of 1 to 3 is healthy. And quick ratio, similar to the current ratio, but it excludes the inventory from current assets, provide a stricter measure of liquidity. So we got all functions here defined. Now it's time to get all of these displayed. Streamlit, sidebar, title, fundamental dashboard, fundamental analysis dashboard. Streamlit, stock symbols is load stock symbols, and if stock symbols, stock symbol equal streamlit sidebar select box, select a stock symbol. So these two lines, we are creating a drop-down selector where the user can select the stock for which it wants to see the fundamental analysis data. And Streamlit title, string, and stock symbol, fundamental analysis. Next we are introducing another data set, fundamental data, which is to fetch fundamental data for the stock symbol. And if it is fundamental data or metric value in fundamental data items, Streamlit metric label equals metric value equals value if value is not else, and so for each of the set of data, metric and value here in fundamental data items, we are checking if those are not none. If those are none, we display not available. If those are not, we are displaying them in a Streamlit dashboard. Let's get here. Else. Streamlit earning. No fundamental data for stock symbol. And if no stock symbol, else Streamlit warning no symbols found. Check your file. Okay. And this last part is again creating a sidebar title, loading the list of stock symbols into the selector. Later on, from select box, user can select a stock symbol, and we are going to display the label for the selected stock as a header and fundamental analysis. And if fundamental data exists, we are showing those metrics for Streamlit metric with Streamlit metric function. And if not, we have two if options to check if the data is shown. If it's not shown, we're showing no data for a particular symbol, and if there is no symbol list, we are showing that no symbols found. Let's run it. Streamlit run task 19. It's weird because it was previously working in our previous exercises. We did the same. Oh, it's sidebar, one typo. Let's correct it and refresh the page. Here we go. As we can see, some of the metrics are not available. It's normal. Yahoo Finance doesn't have all the metrics for this. Those are usually related to paid services. Let's check American Airlines. Market capitalization, PE ratio, EPS. Let's go over these metrics and see which one of those are good and which one are bad according to our definition. Market capitalization, we can see here that it's 99 billion 74,979,840. PE ratio 32, it's kind of a showing over evaluation. It's probably not, according to the threshold definition, it's not a good range, but there can be some other circumstances like growth prospect justification, so let's leave it here. EPS, earning per share, 0.42. We can see that it was less than Apple. Earning per share, yes, for Apple it was 1.6. So AAL is less profitable than Apple. This is a bit the calculation. This is the total revenue. Interestingly enough, let's see how much was the revenue of the company. Is much more than market capitalization. It's like 6 times more, 9 billion versus 54 billion, which is again quite challenging. Debt to equity ratio not available, current ratio 0.57 almost, and quick ratio 0.42. Apparently those two metrics are considered to be in a good shape if those are in range from 1 to 3. So for American Airlines, both of these values are under the positive threshold. So we can consider this not that good metrics. Let's check for Apple. What was our estimation? What we saw in Robinhood versus here? 34.3 capitalization, but this not billion. This is 3.43 trillion dollars. So 3,000 billion dollars. Next, PE ratio 37. Again, this is not very positive outcome from PE ratio. EPS, earning per share, this is calculated on a yearly basis, it seems. Yeah, it's on yearly basis. So for 4 quarters of 2024, this was 1, 2, 3, and 4. Yeah, in total it is close to 6.08, so $6 earning per share per year. This is EBITDA and revenue. We can see here the opposite of what was American Airlines. The revenue is much less than the market capitalization, which is more normal comparing to AAL's situation. Debt to equity 209. So overall debt over the equity is 2 times more. Again, other parameters like sales and other revenue generating mechanisms can show very good values, which will neglect the affection of debt to equity. And current ratios even are still lower than our positive threshold of 1, but still significantly higher than it was for American Airlines. So this is it for today. Hope you liked it. And the important announcement which I was about to make. Next lesson will not be per se coding lesson, but it rather be demonstration of the option analysis dashboard which I built. What it does, it calculates the profitability of different strategies for options. As I'm planning to make it commercial, I won't share the code that this is built on, but rather show you how it works. So maybe even we can go to that one session after. Before we will start with exploring what are the options and what they are for the investors, and next we will go over and calculate and we'll go over the calculations for the options. If you have any other topic that you would like to cover, feel free to comment in the comment sections of this video, and please like and share our video and subscribe to our channel to get more. Thank you for your time. Have a great rest of your day and see you next session. Bye bye.